Hello everyone, my name is Stuart Coulthard and thank you so much for coming along to our latest webinar. Today's topic is things to do before the end of the financial year, and you are up for a treat. We've got 4 presenters today, myself, Eliza Smith, Adam Jacobson and Mark Debblejack. So strap in and enjoy. What I wanted to cover off on first is at the moment we are having a lot of conversations with our business clients. And I wanted to cover off on some of the common questions that our clients are talking about or asking about us when we're having our tax planning meetings of things that we can do before the end of the financial year. So the number one question that I'm getting asked is, how is this financial year or end of financial year different compared to last year? I guess in a contrast compared to last year, there was lockdowns, there was COVID payments. So there was a lot different. So businesses were having a lot of trouble forecasting what they were actually going to do post 30th of June. So making better business decisions was really, really tough to do this time last year. This year, everything's different. Our clients are actually making forecasts now, and they're actually making better business decisions now, and they're actually going forward to actually make everything or putting plans in place with some certainty. The other thing as well is last year, clients were receiving COVID payments. So it was there was distorting the financials and everything. So it was now, I guess, with the payments being lifted out of businesses, you're actually getting a true indicative look at what your business is worth or what's it actually doing without JobKeeper and grants going through your payments. So again, that is a bit different compared to last year. The next question is what do accountants, what are we looking at when we're reviewing clients' financials? I guess what we are looking for is outliers. So what is different? What has occurred during the financial year that looks a bit different? With these outliers that are actually occurring is what we try to look at is what is the tax treatments of them? Are they assessable? Are they deductible? The other thing we're reviewing is trends. So with trends, you can predict certainty or put some forecasts in place to, again, make better business decisions. The next thing is impact on JobKeeper. How is the JobKeeper payments that are being received by your business affecting your business? I guess one thing that we run or tell clients, which they may not be aware of, is that JobKeeper payments is assessable. So you've got to pay tax on it. The other thing is it does inflate your wage costs. So with JobKeeper finishing up at the end of March, all of a sudden we have a true idea of what wage costs will look like. So again, we can forecast and plan for those sort of things. So again, JobKeeper payments are no longer in place. We can make decisions around staffing and wages and costs like that. And probably the main thing that clients talk to me about this type of year is, how do I pay less tax? And what they're really asking, I find, is what can I go out and buy now to get a tax deduction? And I often answer that question is, do you actually need that expense? Do you actually need it? Because again, if you're operating out of a company, you're getting a tax deduction for 26% on that expense. So you're still outlaying another 74% in every dollar for every cost that you spend. So do you really need it? So speaking of general things that businesses should consider before the end of financial year, I might touch on here that this is general advice. So it may not be right for you. So come talk to us, give us a phone call, drop us an email to actually ask us, should you be doing this sort of stuff before the end of financial year? So again, this is very general stuff. The first thing that I touch on is complete a stock take. So if you've got inventory, going out there and counting the stock that you've got. That'll give you an insight on where you are positioned at the moment with your inventory. The right things, are they selling, are they not selling? And if they're obsolete and not selling, write them off before the end of the financial year. You get a tax deduction for that. The next thing is making an immediate, going out there and purchasing equipment. First of all, do you need it? Only buy what you actually need. But if you buy something today, being equipment, being cars, vans, trucks, IT, if you go out and buy it today, you will get a tax deduction for it before the end of the financial year. You could go out on the 29th of June and buy the pieces of equipment, and even the 30th of June, and still get a tax deduction for the full cost. If it's a car though, there is a business use percentage for it, so you can only get a tax deduction for the business use. And there are and also there's a motor vehicle cap on those things too. So there are rules around cars, but everything else, generally you can get a tax deduction for the full thing. The next thing that I talk about is small business pool write-offs. What I mean by there is most businesses have a depreciation of their plant and equipment that they've got that they're depreciating over a number of years. If that pool or the total value of the written down value is below a certain amount, you can actually write the whole thing off. So that's pretty good as well, an accelerated depreciation system. What I'm talking about here is, this is one of the main things that I have a lot of conversations with my business clients, is paying your staff super before the end of the financial year. Why do I say that? Is if you don't actually physically pay it, so it's got to go out of your bank account and hit the super fund's bank account. If you don't do that, you don't get a tax deduction. Super has to be paid. That's as well as your super as well. Also, paying a bonus. So if you're thinking of paying a staff bonus or paying yourself a bonus, that'd be nice. Actually getting it documented, actually recording it, and actually paying it before the end of the financial year, you'll get a tax deduction for that. Reviewing your debtor ledger is something that I think is best practice in your business. And reviewing it before the end of the financial year is also a key time. It's a good time to actually review it to see if there's any bad debts lying around that you can get rid of. Because if you recognise a bad debt, again, you get a tax deduction for that. So if you've got some debtors that have not paid you, why not review your ledger and get rid of them or strike them off? Or first, probably follow them up first just to see if they're going to make pay. And getting payment's better than no payment. But if they're never going to pay, write them off and get a tax deduction for it. A couple other things here is some considerations that I think business should think about in terms of expenses. Can you go out and prepay for some type of expenses? Because again, if you're dragging forward that expense before the end of 30th of June, you get a tax deduction in this year. And either paying your rent, interest, this is just a general examples for it, marketing and insurance. You can, if you pay for it this side of the 30th of June, tax deduction for you. The other side is, can you push out income to the end of the next financial year? Obviously, you've got to weigh that up of if you're pushing an invoice out to the next financial year, will that delay payment? So would you prefer to recognise or get the cash now compared to the financial year? So that's something you need to consider if you're going to think about pushing income out to next year. Bear in mind though, if you're operating a company, if you're operating a business out of a company, the tax rates do come down to 25% next financial year. So you'll pay less tax next financial year if you're operating a company compared to this financial year. So that's consideration for it. More specific expenses that you can consider paying is repairs. So does your van, does your truck need some repairs? Does your office need some repairs? Getting it all done before the end of the financial year, paying for it before the end of the financial year, you'll get a tax deduction. So things that, I guess the things on the screen at the moment, you're going to spend this money anyway, rather than just some random thing that you don't need. So stationery, printers, printing, branding, software. So all of these things that you may incur anyway, getting it done before the end of the year. A comment that I've got there is, if you start your business up this side of the financial year, if you start that up, all the costs associated with the startup of that business is tax deductible. So if you're thinking about starting a business up, rather than doing it in July, maybe thinking about it doing this side of the year, because again, you get a tax deduction. And the last point on there is income protection insurance. If you pay for that again for this financial year, you get a tax deduction for that too. Still going. The next thing is around looking at structuring your debt correctly. And what I mean by that is, do you have debt that you're not getting a tax deduction for it, be it your home or anything like that? So thinking about the debt that you actually have and whether it relates to business, whether it relates to an investment product, structuring it up so you're actually making that debt work for you. You are getting a tax deduction around it. Other specific things that or best practice for business is actually having employment contracts. So if you've been putting off employment contracts for your staff for whatever reason, you probably should have an employment contract for your staff. Go out there and arrange for these little things, getting it done before the end of the financial year, and paying for the costs and getting a tax deduction for it. These are best practice stuff. You probably should have it anyway, and it's not just going out there and spending. Terms and conditions as well, keeping them up to date. Reviewing your trademark should you go out and trademark. Again, spending the money now, or staff training. So these are all specific expenses that businesses will think about doing it, but should you think about it, should you be engaging professionals to organise this, because you do get a tax deduction for it.